Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell on Moneycontrol. It's a very rainy morning here in Mumbai, and looks like it is poised to be a gloomy morning on the Lal Street as well, given the fact that the cues coming out of global markets are very very discouraging. We saw a steep fall coming in on Wall Street last night. This morning, GIFT Nifty hinting at a 200-point kind of cut on the Nifty as well. So we will be bracing for a weak open. Remember, it's the FNO expiry, monthly FNO expiry as well. So expect a lot of volatility in trade. But we'll be focusing in on stocks in news today. We'll also be taking up all your stock-related queries. So if you have any queries, keep them coming in on our live feed. We'll try and get them answered for you. But before we go any further, let's take a look at the top headlines at this hour. Gap down start for the Indian market. Crude prices snap a losing streak as US stockpiles decline, with Brent trading at around $81 a barrel. Gold prices edge higher as the dollar weakens. Axis Bank reports an operationally weak quarter as deposit and advances growth slow while slippages surge. Meanwhile, infra major L&T's revenue growth beats estimates, but a lower than expected margin leads to a miss on profit. 70% of intraday cash market traders incurred losses in FY23 according to a SEBI study. 76% of 30 and intraday traders in the cash market increased by 300% in the last 5 years. Well, on that note, let's quickly take a look at the cues for trade. Yesterday, of course, we managed to claw back from the day's low and ended just about flat and managed to hold on to that 24,400 mark. But the broader end of the markets were outperforming, and how yesterday we saw a 2% uptick in the small cap index and the mid cap index was higher by about 1% or thereabouts, and the market breadth was firmly in favor of advances. But the Nifty Bank index continued to edge lower yesterday as well. It slipped somewhere around 300 points or thereabouts, and today we'll have to see how really the Nifty Bank index is also poised. Of course, we are poised for a gap down open as being hinted by GIFT Nifty. So let's quickly bring on board our technical expert for today and ask him what kind of levels one should be really watching out for today. Joining me is Chandan Taparia of Motilal Oswal. Chandan, great to have you on the show. I think the budget day low was somewhere around 24,074 or thereabouts. Any chances of that level getting tested today on the downside, 24,074?
Good morning, Nandita. Thanks for having me. So we have seen a volatile swings on the budget day. The Nifty drifted to 24,074, witnessed recovery to 24,500 and close above the same. But on the last trading session, it remained range bound in a range of 200 points, but follow was totally missing. We have noticed some underperformance and profit booking in the banking index as well. So as of now, the major support will be at 24,200 and finally at 24,000. I believe if Nifty goes below 24,000, then only the immediate structure could change. Otherwise, 24,200 and other levels could provide some sort of stability to the market. But one thing we need to keep in mind that most of the indicators are indicating about overbought scenario of the market, but few are indicating that declines could be bought. So we have to combine the conclusion of all these indicators. So if I look at the global indices, some profit booking is clearly visible. FI's long short ratio is turned from the overbought scenario of 88%. If you look at the other data setup, your put call ratio fell down at 0.87, but the volatility index is down by 25% at 12 levels, which indicates that major panic is ruling out. So if I combine all, we need to trade the broader range in between 24,000 to 24,750 as of now. For intraday point of view, if manages to hold 24,200, then we can attempt for buy on decline. Otherwise, we can avoid and let the market drip down. Now, talking about the Bank Nifty index, here we are finding some concern. It has given a breakdown on the daily chart and started to form lower top, lower bottom on the weekly scale after taking hurdle at the upper band of the rising channel. So now till it holds below 51,750, your banking index or selective BFSI counter can drip lower, or Bank Nifty can drip down towards 50,500 to 50,000 marks.
Right. One stock in particular I want to talk about before we head into opening bell. We want to talk about Axis Bank. Numbers, operationally weak. NPAs have risen, provisions have jumped. even though profit and NII have risen, but it's the asset quality worries, that could weigh in on stock. Before we go into the opening bell, any levels you will be watching out for here, because it is poised for a weak open. In fact, at pre-open, I can see that it's the top, emerging as a top loser on the index. So on the downside, what is the level you'll be watching out for here on Axis Bank?
Now drifting below is 50-day EMA, so I think weakness could continue. As of now, the hurdle is at 1265. Until it holds below 1265, this stock can drip down towards 1170.
Okay, that's the view on Axis Bank, but I think just seconds to go for the market to open. Heading into open, I can see the Nifty clocking in somewhere around 160 point drop at open. 24,260 is where it's at right now. So 24,200 key support level on the downside. We'll have to see whether that gets taken out or not. Right now, it's holding up above 24,200. It's a 0.5% cut, not a very deep cut as was being feared, but nevertheless, it is a weak open. Sensex is down 500 points, and the Nifty Bank Index 50,900 is where it's at. It's broken below 51,000. But if the sell-off accelerates and 50,000, that level I think will be watched out for. When it comes to the Nifty Bank Index. In terms of, some of the sectoral movers, just want to see what the other sectors are doing and which one is, emerging as a support for the market today. In fact, no, all of the sectors are trading in the red. Bank index, as you know, down almost 1%. You have the energy pack down 1%, metal pack 1.5%, private banking lot is also down 1%, realty pack. So all the sectoral indices are trading in the red. It's a broad-based sell-off. Looking at the broader end of the markets, even the Nifty mid-cap index is down somewhere around 1% or thereabouts. So all-round weakness as was being expected. In terms of individual movers, very few gainers on the Nifty, just about a handful of them, 5 Nifty gainers. SBI Life happens to be one of them. Numbers came out yesterday. It was a mixed bag, but it is reacting to that. Top Nifty gainer. Tata Motors on the back of an upgrade by Nomura among gainers. L&T margins were disappointment, but revenues beat estimates and order inflow guidance has been maintained. So L&T among the gainers. Nestle India reports numbers today. Ahead of that, it's trading with 0.4% kind of a gains. ONGC, that's another one that's in the green. HUL flitting between green and red. Yesterday, Britannia, HUL, all these FMCG names were under selling pressure. Today, they are managing to, they're looking at some bit of, uptick in early trade. On the losers side, you have Axis Bank, 5% down on the back of an operationally weak quarter. Hindalco, Shriram Finance, Tata Steel, some of these steel names are not doing well. Metals as a pocket under pressure. Power Grid, private banking names, of course, under pressure. So ICICI Bank is another one that's not doing well. Reliance, BPCL are some of the other losers. Looking at the open, Chandan, what would you be keeping on your radar, in terms of recommendations?
If you talk stock specific, I believe the 24,200 is key level we need to watch in Nifty. I can focus on selective insurance name. SBI Life is on radar, and other insurance company could see some positive action. So SBI Life, one can look at support of 1640. It can head towards 1720 kind of levels. Selective FMCG counters can do well. Positive on the Tata Motors. Even after the weakness in the global market, this stock is not drifting down, indicating some sort of resilience and strength. So with support of 1015, one can look for a target towards 1075. So Tata Motors, SBI Life, these are the counter which could be on the positive side. Now, if you talk about the negativity, I believe BFSI could be on the negative side. Already we discussed about BFSI. Axis Bank looks good. RBL Bank can drip down towards 220. Even Bajaj Finance looks good, can drip down towards 6300 zone.
Okay, that's the view then. I want to talk about an L&T. This stock has been, has not really been doing all that well. In fact, if you look at the 1 month chart, it is barely moved. Today, in a weak market, the stock is holding out. Numbers came out. Margin guidance has, I beg your pardon, order inflow guidance has been maintained. Margins have been a miss. Profit as well, not all that great, but revenues have managed to beat estimates. Going forward, do you think or do you see any kind of reversal on charts for L&T? Do you think it could reverse the string of underperformance and and should one think of taking positions now to ride the up move if there is any sign of that?
L&T is not a weak counter. Either it remains positive or positive to range bound. We witnessed a profit booking decline on event day. It drifted to 3460 marks, but again, some sort of support based buying is clearly visible in the stock. So I believe the broader range will be 3450 to 3700 zone. One can play this range, can go with buy on decline stance.
Okay. Another stock that I want to get in your thoughts on is ITC. It cleared that 500 rupee mark yesterday, 510. That was the 52-week high that it hit. In fact, all-time high it hit. Do you see more legs? Do you see 550 anytime soon? Because ITC has traditionally been a slow mover. Managed to clock that 500 mark for the first time yesterday, although it hit that 400 mark an year ago, so to say. So here on ITC, would you feel that within the consumption basket, ITC is the best poised on charts now?
Then I think you are talking about ITC and higher levels. So if I look at the ITC, the major trend is positive. However, we witnessed some profit booking decline from higher levels. There are two reasons. First, every budget day, we are worried about any taxation on cigarette. And that is the reason that usually stock turns volatile, but nothing was spoken this time. Second thing, Nifty FMCG is doing well. And already the stock has been making higher tops, higher bottom from last 5 consecutive weeks. It rallied well from 420 to 510. So after such a strong run up, some sort of consolidative move could be there. But overall, we believe till it holds above 470, buy on decline could continue. And finally, it has potential to extend the move towards 510 and then positionally towards 550, but that might take some time.
Okay, that's the view on ITC. But what about Nestle? Would you look at taking positions ahead of numbers?
Yeah, so I think SBI, Nestle, you talked about Nestle. So Nestle has been consolidating. Yeah, I think Nestle witnessed some profit booking decline. It corrected from 2650 to 2500 zone. So let it consolidate. Follow-up is not visible. Consolidating move is there. So let it come down to 2450. There we can talk about the bargain hunting.
Okay, that's the view on Nestle. But want to talk about a JSPL as well. Numbers came in better than estimates. Profit was down 20%, but the street was working with a higher or bigger drop in profit. That hasn't happened. Revenues were up 8.5%, managed to beat estimates. Margins were flat, but still better than expectations. And EBITDA per ton also was above what the street was really anticipating. The stock has, of course, been in a downtrend. Do you think it has now entered oversold zones and, buying at current levels could actually make sense here?
So yeah, talking about JSPL, we have negative view on the selective metal name because the metal stock failed to hold the higher gains. Jindal Steel or JSPL has been making lower tops, lower bottom, but now we are near the multiple support. If I notice the price behavior on 4th of June on the election day, it drifted to 900 and then slightly turned higher. And again, the 900 could provide support. So it made low near 920, but I believe 900 could act as a major level. So with support of 900, we can play for a bounce towards 975 to 1000 marks. So structure is weak, but it has come to the major support zone. So because of that, some sort of recovery could be there.
Okay, another stock that I want to get in your thoughts on is RBL Bank. On the back of that block deal, the large trade has happened. In fact, just want to pull up the charts of an RBL Bank and see how that's doing. Bearing PE was supposed to sell or exit the stake that it has in the bank, 7.9%, so they're about to be specific, worth over 1100 crore rupees, and that large trade has happened. Sources suggest that Bearing PE was supposed to really be pairing its stake. But within the banking lot, how is RBL Bank looking now? 3.5% down right now, 10% down in the last 1 month. 300, that was the 52-week high. It's at 230 or thereabouts. Any strategy you're spotting here? Any trade here?
Yeah, so we have negative bias on RBL Bank. As I mentioned that we have slightly negative on the BFSI. Bajaj Finance, Axis Bank, RBL Bank are the name where we might see some more profit booking decline. Structure is clearly weak. As of now, the major support goes at 220. Below that, further leg of downside could be there. So weak structure is there. I believe weakness could continue with hurdle of 238. It can drip down to us 210 and even then lower levels.
What about SBI Life? Among the gainers today in a weak market, I can see the stock is up 2.5%. HDFC Life, all these life insurers have been doing well off late. Numbers were mixed for SBI Life. VNB, value of new business, that was up 11.5%, but that was a slight miss, and even VNB margins were a slight miss. But annual premium equivalent was up 20%. That was above estimates. New business premium was also in line with estimates. Is the momentum back for some of these life insurers? Should one look at these three names like HDFC, ICICI Pru as well as SBI Life?
So Nandita, I spoke about SBI Life in the morning commentary and in fact given the buy recommendation with sub levels. So I believe yes, positive bias is likely to be there. On last trading session, we formed this stock formed a bullish engulfing pattern and follow-up is clearly visible. So with support of now at 1645, it can head towards 1725. So positive bias is clearly visible in SBI Life.
Okay, positive bias on SBI Life, but Tata Motors, it has earned an upgrade from Nomura. There's a margin tailwind that Nomura is spotting on Tata Motors. It has upgraded the stock to buy, and the target price has been raised to 1294 or thereabouts. Of course, JLR execution can lead to significant upsides. Even the demerger may unlock value for the CV business, and it has raised target multiples as well. But within the four-wheeler pack, would you prefer a Tata Motors or a Maruti at the current juncture?
I'll go with the Tata Motors. Again, the re-rating is clearly visible on the chart. It has given a long consolidation breakout of last 50 days with a decisive hold about 1000 marks. So I believe with support of 1010, the ongoing momentum could extend. It can extend this rally to us 1100. So 1080 to 1100 is the zone where we are talking about Tata Motors.
Okay, let's take up some viewer queries. Then on that note, we have a query coming in on a TVS Motor. Satvika Ranganathan wants to know why is TVS Motor not moving. On the charts, the stock has pretty much been sideways in the last 1 month. Two-wheeler stocks, of course, had seen a great run, but in the recent past, they have come under some bit of pressure. So TVS Motor, if somebody is holding, any strategy you would advise? If they have some holding, should they average, or should they look at booking some profit, partial profit, or how should they really go about their holdings?
Yeah, so overall we have positive view on the TVS Motor, but it got stuck in a broader range. However, the good part is every small decline is being bought, but only concern for time being is the follow-up actions. So we require a decisive hold about 2500 zone. Then this counter will start the next leg of rally. So if you're holding, you can hold with support of 2350. If you want to add more, buy about 2500 in that scenario. Further 5 to 8% run up towards 2650 to 2700 cannot be rolled out in this counter.
Okay, that's the view. Hope that answers your query. But the next query is coming in on a Jubilant Food. Any thoughts on the QSR space? Because, no real signs of a rebound for some of these names, right? And Jubilant Foodworks is one of them. In the last 1 month, we've just seen a 3% uptick. Last 5 sessions, hasn't really done much, no big moves. But, given the fact that we saw some bit of announcement on, personal taxation, do you see this QSR pocket emerging as a beneficiary?
Yeah, Nandita, as you asked, thoughts are very positive on the Jubilant Food. Looking at the chart and weather as well, it's raining heavily in the city, and I think Jubilant Food is holding the gains. So base is clearly shifting. In the recent decline, it managed to hold support at 550, formed a bullish candle. So small follow-up is required, but we believe buy on decline could continue by looking at this weekly and the daily price pattern. So with support of 563, this counter can extend the run up towards 605.
Okay, that's the view. Hope that answers your query. The next query is coming in from Pon Rajesh. Wants to know your thoughts on a GNA axle. Uh, I don't see a very strong up move on the charts. In the last 6 months, we've seen a double-digit negative return from the stock GNA axles. But given the fact that it is attempting to make some bit of recovery over the last 1 month, no big moves, but positive returns in the last 1 month. Do you think is there a chance of momentum picking up from here?
Nandita, if you look at the GNA XL, so we are not tracking closely, but yes, if I look at the price behavior, it has been consolidating in a broader range. Just couple of days back, it made high near 460. It witnessed decent recovery from 360, and now we are in the middle of the zone near its 50-day exponential moving average. So setup is not clear. Broader range is positive. Buy on decline could continue. If someone is holding, our advice is to hold with support of 380. Slow and steady, it can head towards 460, 480.
Okay, that's the view on a GNA axle. Hope that answers your query. The next query is coming in on a BEL, Bharat Electronics. I can't get the person's name, but the person in question is holding 1,000 shares at the rate of 315 rupees per share. So he is making a loss here. At the current juncture, the stock is just under 300 rupees. He wants to know what he should do. Of course, we've seen defense stocks take a breather after the stellar up move that it has seen. Of late, we've seen profit booking kick in. He is making a slight loss here. What should he do?
So if someone is looking for positional and long term, then there is no worry about BL. But yes, for intraday point of view or for 1 week point of view, need to look at some big step. It started from lower top, lower bottom, couple of days, make high near 340, and then corrected all the way to 280, and now it's near 300. So 280 is multiple support as of now. If you are looking for trading point of view, follow the support of 280 for 315. If you are looking positional, then I think 265, 270 will be support for upside target towards 340 to 380.
Okay, nothing to really worry if you're holding it for the long term. That's the view then. But, IFCI, that's one stock that has been buzzing, and how? Raghunathan Bharadwaj wants to know your thoughts on this particular stock. Today it's up 4%. Over the last 5 sessions, we've seen a 21% up move. In the last 1 month, a 41% up move. How would you suggest one really looks at this stock? It's very close to, in fact, it hit a fresh 52-week high today as well. Is it moving towards the 100 rupee mark?
Yeah, so the price pattern is quite interesting and impressive. We have seen a major breakout on the daily and the weekly chart. And I believe this is happening after a long time. And volume is clearly visible on the daily chart from last 9 days. And recent price breakout with support of 83 can accelerate the recent move towards 99 to 102. So I believe 20 to 30% run up can be seen in the counter. Yeah, it's a low price stock, so need to keep the position sizing accordingly. But as per the price pattern, I believe 15, 20, 25% kind of run up could be seen in the stock.
That's the view on IFCI. Hope that answers your query. Som Mendigar has written in. He wants to know your thoughts on Avari Renewables. Charts are looking weak. Look at monthly 5-day charts. How would you, really look at this chart? Because last 6 months we saw a good move, but after that, monthly returns haven't been all that encouraging. Should one look at booking whatever profits they've made and look at other renewable stocks?
So Nandita, you spoke about certain names which could see some volatile swings, but I believe in this market better to be with selective heavyweights. If you ask the stocks from my side, I can talk about counter like SBI Life, which one can look. However, we started to witness some recovery in HDFC Bank, but again, other banking stocks are not doing well. I can focus on counter like Petronet, where we may see a consolidative breakout. So with support of 340, Petronet can extend the run up towards 380. We can also talk about IFCI. I think one of the nice query we received, and I think one should go long for target of 100. So these are the counter. And I think you talked about some worry renewable. So I'm not closely tracking, and that is the reason I talk about the few stocks which I like compared to the name which you asked.
But what about Borosil Renewables and HBL Power? These counters have been buzzing, right? So would you advise taking positions there?
Yeah, Borosil renewal one can hold on weekly chart after a corrective leg of 25 weeks. It finally formed a strong bullish candle with significant surge in the volume. If you notice 4 days back, the volume was significant, and the same is happening in last 2 days. It has given a decisive breakout above 535. So I believe with support of 535, look for 600 plus kind of level. So I think these stocks started to witness some attractions. One should go long here, look for a fresh breakout. And Nandita, I want to mention one more name. You asked about IFCI. I can also talk about IDBI. IDBI has given a breakout about
IDBI,
92. So with support of 90 to 93, look for 110. And the good part is all these stocks suddenly came on radar and given a breakout. So one should get participate. And these are the public fancy name. I remember long back, people used to have tendency to trade these names. So I think the giving the level will may help them to participate in all these names.
You know, another breakout stock, so to say, is MMTC, right? Yesterday it was up 20%. Today, again, I can see a 15% up move here. What is the, immediate resistance that one should really watch out for on an MMTC now?
So we are not positive on the Nifty metal. Nifty metal is said looks weak, making lower top, lower bottom. And this pocket may be on the negative side, making lower top, lower bottom. As of now, multiple supports are visible at 220. Below 220, it can open downside towards 200. So till it doesn't surpass 245, I think stay cautious or avoid long position or try to exit on bounce. If it goes about 245, then only the immediate weak structure could nullify for some bounce back and the recovery.
Okay, just about a couple of more queries then. Any thoughts on Asian Paints? Has your view changed? Is there some signs of an up move? Because recently it took a price hike, and in that particular week we saw the stock doing well. But I think once again it has succumbed. So any clear trends emerging on charts of Asian Paints now?
Yeah, Nandita, in your last query, I heard about NMDC, so I replied on NMDC, and I'm sure you wanted to know the view of MMTC also. So if you talk about MMTC, looks for a breakout with support of 110, it can head towards 135. Now talking about Asian Paint.
No, we were talking about Asian Paint.
Yeah, Asian Paint, it has been moving in a range. So multiple supports are visible at 2750. So let it correct to 2750, then only some sort of recovery is there. And I'm not in hurry to go and buy because it has been consolidating in a range from last almost 25 weeks. So as of now, no breakout chances, but no breakdown is also there. Let it consolidate, and then only the next leg of rally could be seen in the counter.
Right. Okay. Aside of that, any view on Divi's Lab? This stock is among the losers, 1.5% within the pharma pack. Anything that's catching your fancy, the likes of Dr. Reddy's, Sun Pharma, Divi's, would you go for any of them now?
So yes, selective pharma stocks are doing well. If you look at the Divi's Lab, has been witnessing some sort of recovery, but again the follow-up is missing, and that is the reason I don't want to go long here. Let it find support near 4,400, then only some sort of buying interest could be there. Granules may be one name, but again we need to look at some sort of support-based buying. So I believe buy on decline could be there. Granules can be bought with support of 510, but let it correct to 525, 530, then only the buying is advisable. So look for buy on decline stance in such names.
All right, that was about the pharma pack. But of course, we also have a query from K. Naga on IDBI Bank, but we already spoke about that. So you could perhaps rewind the feed a bit and go through what Chandan had to really say about, IDBI Bank. But with that, we've come to the end of the query segment, and of course, we've come to the end of the show as well. Chandan, would like to thank you for taking out time and joining in and sharing your thoughts with us. Look forward to having another interaction with you sometime soon. Thanks a lot and have a great trading day.
Thank you so much, Nandita. Have a great time.
Thank you. Thanks a lot. On that note, let's take a look at the markets then. We are off the day's low, but still it's a triple digit cut, 130-point cut on the index, 0.5% lower for the Nifty and Sensex, and the mid cap index as well moving in tandem with the benchmarks. It's the bank Nifty that's slumped somewhere around 1% or thereabouts, and looking at some of the losers, of course, Axis Bank is topping the list, almost a 6% cut coming in on the back of operationally weak quarter. NPAs have risen, slippages have risen on a quarter-on-quarter basis, so concerns there. But aside of that, metal names not doing well today. Hindalco, Tata Steel, these are some of the names on the losers list. JSW Steel as well. Aside of that, some of the consumption names like Titan have also come under some bit of profit taking today. And on the flip side, you have SBI Life. That stock is doing well. Numbers came out yesterday, mixed bag, but the stock is doing well, 3% up in a weak market. L&T post numbers, 2.5% uptick. It has maintained its order inflow guidance, although margins have been tad disappointing. Tata Motors on the back of an upgrade from Nomura is doing well. ONGC, Britannia, HDFC Bank and Kotak Mahindra Bank are holding out, even though the Nifty Bank index is down 1%. Bajaj Auto from the two-wheeler pack is doing well. Nestle ahead of numbers is doing well, and Tech Mahindra as well. I think that stock should be in focus given the fact that numbers will come out. It's trading with losses ahead of numbers, almost 1% lower for that one. But let's see whether or not we manage to defend that 24,200 mark on the downside or not, because that's a crucial support level that technical analysts have flagged off on the Nifty. If we break below that level, then 24,000 could be the next big support. But on that note, we've come to the end of this edition of Opening Bell. Of course, I'll see you with the closing, with closing bell or on closing bell at 3:30 p.m. when the market shut shop, and how the markets really shut shop for the day is something we'll be talking about. So don't forget to tune in for that at 3:30 p.m. But for now, it's a goodbye from me and the entire team that put the show together. A triple digit cut on the Nifty. Let's see whether or not we manage to make some kind of a comeback from these levels. 24,300, almost, that's the level on the screen right now. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.